And these next two slides show an important concept on volatility. Again, in retirement, as you plan on withdrawing money from your investment portfolios, volatility becomes your enemy rather than your friend. Here's our question we pose to our live audiences. For those of you in the back, anyone having trouble reading it? Okay. And as you can see, all three answers have an average 10-year return greater than our withdrawal amount of 4.5%. However, as you probably realize at this point in the presentation, a little bit of a trick question. Again, answer A is the 10-year return from Fidelity Contra Fund, a Morningstar 5-star rated fund during that 10-year period. The volatility, the early years, especially in 2008, really brought the average investor in this fund, who is withdrawing 4.5% annually, it really brought their portfolio value down. The average return in this 10-year period is still above our intended withdrawal rate, but in actuality, 23% capital depletion. Again, similar story, American Funds, AMCAP, another large cap growth, Morningstar 5-star rated during that 10-year period. And as you can see, a little bit of an example here. The end of 2007, after 8 years of withdrawing 4.5%, pretty good capital protection. You're down almost 16%, but really get hit hard in 2008. And then despite an almost recovery percentage-wise in 2009, you're getting this percentage on reduced capital. The depletion happened on a lot more capital. So overall, considerable depletion. And in our example, where we use some asset allocation, let's move the camera a little bit. Thank you. And you see here in the depletion is much less using the asset allocation, where we were 40% in the AMCAP, American Funds AMCAP fund, and 60% in the PIMCO low duration bond fund. So again, overall, the asset allocation, your highs aren't as high here, your lows aren't as low. Great protection of capital, reduced volatility, significantly protected our portfolio with our fundamentally sound withdrawal rate. Really quickly, what if we had a higher withdrawal rate? Well, it's even more exaggerated, the depletion of capital, as you can see, between some of the funds. If we use a much lower withdrawal rate, again, it's a narrower. They all protect it pretty well. Your best performance still with the reduced volatility through the years. An important concept there in volatility.